A new era is upon us. Tangent Proptech unites founders, real estate and VC investors, urban leaders, and passionate creators who are improving our communities and cities. Join venture capitalists Jeffrey Berman and Zach Aarons and Proptech entrepreneur Edward Cohen, that's me, to learn about housing innovation, the future of work, and climate tech. We examine these themes through interviews and conversations with Proptech CEOs, real estate owners and operators, and venture investors, and how we can leverage tech and collaboration to help solve the housing crisis, figure out the future of work, and how to decarbonize the built environment. If you would like to get your company's or organization's mission featured on Tangent, email us at tangentcommunity@gmail.com. Hi, I'm Edward Cohen. Welcome to Tangent.
I'm Zach Aarons. Pleased to be here as always. I will do my best to sound exactly like Jeff Berman.
Today on Tangent, we have Dan Wenhold, partner at Fifth Wall, the largest venture capital firm focused on technology for the global real estate industry. Hi, Dan. Where does this podcast find you?
Edward and Zach, good to be with both of you and see both of you again. I today am at home in Southern California, which when Fifth Wall started now, nearly, I think, a little over 8 years ago, we had everyone out here. But I think as maybe some folks know, we've since moved, quite a few people around and have teams in New York and San Francisco here in the US, as well as some people internationally. But I still call Southern California home.
Dan, you and your team invest in tech companies tackling some of the most pressing real world challenges, including climate change, housing affordability, the future of work, and aging buildings and infrastructure. Could you share how your journey led you to Fifth Wall and what drew you specifically to investing in real estate technology?
My background is mixed between being a generalist VC much earlier in my career, and then after that, stopover in operations for a startup. And at that particular startup, I wound up eventually managing all of their real estate operations related to brick and mortar retail. So that was really my first specific kind of foray into real estate, but wound up enjoying that from the ops side. I always liked investing. So I actually met Fifth Wall in Los Angeles around the time that they were just starting out. I don't even know if Brendan and Brad at the time had held a first close, but I met them in a co-working space and really liked that they were sector focused. They were talking about some of the challenges that I was experiencing around tech adoption on the real estate side of things. And then they also were an early stage company themselves. And I was really drawn to my experience, previously joining a startup and wanted to be potentially part of that again, if I could, kind of mix that with what I had previously done on the venture side as well. So it just was a right time, right place type of situation. And, after getting to know them a little bit, wound up joining the team back in 2017.
Fascinating. I mean, I think nothing as exciting as being part of early stage yourself and then now powering early stage and, even more mature founders to accomplish their dreams. Curious, so how does Fifth Wall and yourself evaluate potential PropTech startups? What specific criteria or frameworks do you use when deciding to invest in a company?
I think I could give you the boring answer that probably any VC would about financial metrics and team and market size. So I won't belabor that point. I think the thing that's probably more important and unique to Fifth Wall's model is that we have over now, I think, 110 strategic LPs that are some of the largest owners and operators in real estate and make up a consortium across many different types of asset classes and are both international as well as domestic here. They provide for us a really unique network when we're looking at a new investment. And in a lot of ways, they function as another, really critical layer of diligence. We'll meet an interesting team or a founder in a particular area, be it residential real estate or commercial real estate. And oftentimes, before we even do real kind of work on that company, we will talk to those LPs about these businesses, and we'll get real time feedback. Those LPs also act as an interesting, in some ways, sourcing channel for us too. They're oftentimes approached by companies, and they'll reach out to us and ask, "Hey, Fifth Wall, have you heard about this business? Or if you haven't, what do you think about it?" And that's really invaluable. And I think for Fifth Wall being sector focused and very specific in terms of our investment mandate, we're able to, I think, really go deep on the commercialization side of companies and understanding how well are they prepared to work with some of the largest players and buyers of their technology at very early stage. how does this mesh with potentially, existing infrastructure that some of these incumbents have? What is sort of the view of this business versus others that they may have assessed or evaluated in the past, or maybe are already working with? It just is a really, I think, additive layer for us. And then of course we blend that with all of the boring financial analysis that, as I said, I think many other VCs do with businesses, but a heavy emphasis on the strategic side as well.
Interesting. During a recent episode with one of your company founders, Remen Okorua in Propexo, Zach mentioned how interoperability is something that has become crucial, especially if you're looking to, integrate either with PMS or just working with a number of stakeholders that aren't typically used to integrator, or that integration has a big overhead cost from the engineering side. Curious, have there been any new themes where you consider companies? Also curious to hear from Zach, but one that comes to mind obviously will be AI. If that's something that, can they harness AI in such a way, or will ChatGPT just feature them and then become obsolete tomorrow? Have there been new themes that you consider now when considering new companies to invest in?
Well, we really like interoperability. So I agree with Zach's take on that. We've invested in, as you mentioned, Proptech. They are helping to solve that problem across the PMS ecosystem. We've also invested in the company that's doing something very similar in the construction tech space, and we've evaluated others in the hospitality space with guest management software as well. And it's interesting. I think right now you have a lot of these, call it decades old sort of legacy tech systems of record or infrastructure that is sort of tech debt within these specific industries. But you also have this proliferation of really interesting applications, things, some that are attached to generative AI, others that are focused on data synchronization. And I think that does create an interesting opportunity to create applications that do talk to both the older systems, but the newer systems, and are able to sort of pull the data, synthesize and synchronize that, and allow owners and operators to really have a single pane of glass for their assets. So we are spending time looking at that specifically within multifamily and commercial right now. That's, I'd say, one of the more kind of interesting things at the moment. And I think that the other thing that we're seeing is that a lot of businesses really within Proptech is less about today, I think, the shiny object as far as what's happening in generative AI and others. But for them, capital is a massive inhibitor right now to growth for many companies. And I'm not just talking about capital as it relates to OpCo or TopCo financing. We're seeing a lot of companies that are basically hamstrung by their inability to raise capital as it relates to growth on the financing side of their business or on the real estate side. So are there unique ways to help them unlock, alternative forms of capital? I think that's really interesting right now, just given the lack of or challenge for many incumbents to access or unlock new capital in that way. And then I think, again, like being an investor that today is, or historically, I should say, is more focused or has been focused on consumer, I'm really interested in some of the trends and shifts that are changing how consumers are interacting, buying, selling real estate. One of the things that interesting over the last year that happened, some of the changes with NAR's fee structure that they have. So is that creating new opportunities for companies to come in and say, hey, we're going to seize on some of these recent legislative changes that potentially, with generative AI could help create new systems, transaction systems of record for actually having access to buying, selling residential real estate. So legislation, data synchronization, I'd say, and then just call it alternative forms of capital across other pools outside of just traditional VC.
I think that's certainly a trend that we've seen in this new PropTech era, post-ZIRP, if you will, where capital misalignments happened in the past, where maybe there was the right idea, the right team, but the type of capital wasn't aligned with the type of growth or how, the roadmap that these companies needed to follow. Curious, what other sources of capital, or let's zoom in a little in terms of what types of capital or how are these structures being deployed to enable founders to really grow their companies at a more aligned pace, if you will, or more aligned incentives?
I think there's a lot of startups that are approaching us now that want to be vertically integrated in the sense that they want to buy the real estate that they're managing or that they're sitting on top of, and then also have the operating company as well. Whether that's a software application or a consumer marketplace that they're building on top of that real estate. And I think there's different investors out there today that have interest in looking at and evaluating those. There's different risk return profiles for each of those pools of capital. So I think there's a lot of talk in the industry right now about OpCo, PropCo, and there has been for a while. I think the interesting thing that we're seeing is alternative, call it almost like industries or business models now that are trying to unlock this. So for a while, I think we were seeing a lot within, for instance, STR or SFR as being the most logical ways. But we're seeing more in hospitality. We're seeing some in self-storage. We're seeing some in senior living that may be rooted in those asset classes, but from an operating model look a little different than the types of opportunities we saw 3 to 5 years ago.
Fascinating. Zach and Dan, what specific types of technologies and solutions are you most interested in backing going forward?
It points to a question you asked earlier that every VC is always thinking about with respect to this new generative AI LLM wave, and that's, are the sector agnostic foundation models that are raising billions of dollars of cash, whether it's OpenAI or Anthropic, are they just going to be able to do all of these tasks and these real estate or construction specific or lending specific layers on top of them? Will they just disappear because they're become obsolete and fundamentally an additional cost because the firm has to pay for they have to pay, even though it's relatively inexpensive, they have to pay the foundation model company to access its suite. So what I think will happen in real estate is part of the moat that these AI companies, I'm seeing them create in a bunch of different subsectors, will be tied either to their integratability. So if you look at where Gen AI usage has just exploded, it's in leasing apartments and leasing single family residences. So those companies will, for the next 20 years, beat the foundation model if they're well run, because they're able to develop a moat integrating with the rest of that client's stack, which to the conversation earlier is substantial. There might be a property management software system of record. There might be some sort of marketing tool. There might be a CRM, a leasing CRM. I don't believe the larger companies, I think they have bigger fish to fry, are going to take the time and engineering resources to engage meaningfully in that work. So it's delivering a best-in-class experience to the client in the way that the real estate-specific LLM chat company, whatever it is. So that's one way, I think. And then just having so much more very specific, actionable training data. You have to understand these companies started way prior, the successful ones, they started way before ChatGPT was released in 22. A lot of these companies started back in 16, 17, 18, building their technology. The other moat, and we're really excited about this, is a company can take what a foundation model visual tool like a DALL-E can do and mix that with specific prosaic generation and then tie that back to visual recognition through computer vision algorithms and technology that's improved massively but has been around a lot longer than generative AI. And that can create a moat. So we're investing in a business right now. They are able to take architectural specs, mechanical specs, other subcontractor specs, match them to the drawing set, shop drawings, mechanicals, design in 2D, and provide an understanding of what's screwed up here. Can effectively take an AI and peer review that suite of both visual and prosaic documents. And I don't believe, again, with something like this, when you're blending the creativity of LLMs with the computer vision power, it's going to be very hard for any computer vision company to come in and disrupt that, or any foundation model LLM company to come in and disrupt that. Does that mean all those businesses will be multi-billion-dollar businesses? Probably not. But it means that for us who are, call it seed through Series C investors, there's plenty of upside in a lot of those businesses because the addressable markets in the built environment are large and adoption is rapidly accelerating.
I agree with a lot of what Jack said. I think the data proliferation and the training models and what's I think very specific to real estate and what's not is interesting and presents. I talked a little bit about it earlier. This opportunity for other folks to concentrate on how do we pull all this data now that lives in very sort of disparate systems across a technology stack for owners and operators and synthesize it and synchronize it and allow it to be queried. So again, kind of going back to what I said, I think whether you attack that by saying I'm going to build on top of the legacy tech stack that exists and you have some system that is a single pane of glass that can pull all that through, or I think one of the other interesting things that we're starting to see folks go after is just what if you just burn it to the ground and just build it completely, and that's PMS system or guest management system. And that's definitely scarier and a lot more daunting. But, I think just last week, there's a business that was funded out of Miami Door Loop that I believe is trying to go after AppFolio and do that. And there's other companies, there's another business, that's trying to do this in terms of the modular kind of approach to building property management software. If you step back, you always kind of ask yourself, why does this not already exist? Well, one, I think it's really hard to take your data, really hard to take your financials that are running through the accounting systems in a lot of these software systems and move them to new software, which is why I think a lot of folks have opted to build on top. But we are seeing some people that are trying to take a more disruptive approach now. You have to ask yourself, why doesn't within property management software there exists a system like Toast, right? Where you have your system of record and then the ability to add applications through some type of store essentially on top of that. This kind of gets back to what Proptech is doing. They're taking a little bit of a different approach where they're saying, hey, we'll help you with that integration, but why not just build that from scratch, right? From the start. And I get why it's very lucrative for these companies that are the incumbents, right? It's actually counter to having many of them say, sure, here's an open API, build to your heart's content. But at the same time, you have to start thinking, is there a better way to potentially build an alternative to that? And it's not just real estate. It's not just residential, I should say. It's, it's commercial, it's hospitality, it's what exists in construction. I think there's a lot of opportunity. It's just, it's going to require the right entrepreneur, the right team and the right capital and sort of also think this is where design partners bring strategics into a process earlier. Similarly, how one of our companies built Rewards did with many of the multifamily industry partners as they launched. Something like that, I think makes a lot of sense here.
Support for this episode comes from Pacaso. Pacaso is transforming the $1.3 trillion vacation home market. Their innovative marketplace makes buying, co-owning, and even reselling luxury homes seamless. Here's the reality. 75% of Americans dream of owning a vacation home, and 40% want one within the next year. Pacaso is redefining luxury vacation home ownership and capturing this huge demand by making it easier than ever before. And now, for the first time, they're opening the door to a unique investment opportunity for accredited and non-accredited investors who can purchase stock in Pacaso through their latest growth round. That means you can join their cap table alongside top-tier investors like SoftBank, Mavron, Greycroft, and Fifth Wall. With over $100 million in gross profits and more than 1,500 happy homeowners, Pacaso has already established itself as the market leader. Now you have the chance to own a piece of this high-growth company, built on a strong foundation of a vibrant community of co-owners and housing industry leaders. If you want to be part of reshaping the vacation home market alongside top-tier investors and the former CEO, co-founder, and executives of Zillow, visit pacaso.com/invest. That's pacaso.com/invest. Pacaso, making luxury vacation home ownership accessible for everyone. Disclaimer. Investments in Regulation A offerings are speculative, involve substantial risks, and are not suitable for all investors. Read the offering circular at pacaso.com/invest before investing. Past performance is no guarantee of future results. Please consult your financial advisor before making any investment decisions. To Zach's point earlier, computer vision, machine learning has been around before ChatGPT. I got to work with technology at Cape Analytics where we took aerial imagery of single-family homes. And thanks to computer vision, machine learning, we were able to identify the physical condition, the exterior physical condition of each home in order for institutional SFR investors as well as non-performing and reperforming loan buyers to assess, the condition of a home and see if the valuations or the AVM models were missing anything so they can price and assess homes better. So I can imagine with now the power of ChatGPT and all the other folks, we can really take this to the next level with computer vision. So it's about the convergence, right? Convergence of these magical technologies that we're seeing. I think definitely is promising. Now let's shift gears a little bit because Dan learned his lesson, a lesson that we all learned this week, that maybe not going on a podcast could cost you a lot, like an election, but that's neither here nor there. I want to ask you in particular, Zach, we have a new administration, a Republican administration, could potentially have 4, 8, or 12 years of a Republican leadership with such a, young vice president with a large portion of Silicon Valley or big names in Silicon Valley. So curious, what do you think is going to be the impact on not only investor sentiment, but also around, government programs that work to provide grants or tax abatements for Proptech initiatives? Curious to hear your thoughts on that.
There are a handful of initiatives that the new administration, new Congress is signaling it's doing that I think none of them directly impact us in the built environment on a daily basis, as most of that is legislated at the municipal or state level. But there are a handful of initiatives that I'm not a political pundit, but that most people think are going to happen to some degree that do impact the sector. So the first one I would say is tariffs. So tariffs impact our sector. If there are tariffs imposed again on China, that ultimately impacts the hardware part of our sector. And a huge part of what Dan and I invest in is somewhat dependent on hardware, right? And so you saw a lot of companies during COVID who were in hardware for the built environment diversifying their supply chains already away from China, but that trend will continue. And we're going to see those tariffs are most likely going to be inflationary. And so we're going to see margin erosion, most likely, of hardware companies in our sector, and just sort of general inflationary pressure upward, which is traditionally not great for early stage venture and real estate. If there's upward pressure on inflation, there's a lot of downward pressure as well on inflation right now. So who knows how that'll actually shake out in the numbers. But tariffs are something that people should be paying attention to. I think another area of government where the administration has quite a bit of influence is the Justice Department and the FTC. Currently, the FTC in this current administration has been very active looking to block a lot of M&A transactions. And the Department of Justice has been pursuing cases against players in our sector, whether it's the NAR settlement that Dan was talking about earlier, whether it's the litigation against RealPage that has played out starting this year. A new administration will most likely want new people in Department of Justice, in the FTC. I think the challenge for prognosticators here is there has been different signals about what people's views in the new administration are actually going to be with respect to sort of being more lenient on the M&A front, or actually being even more stringent and more aggressively going after some of these potential tie-ups. So that is definitely going to change, but exactly how it's going to change, I couldn't tell you, because I think if you look at that, their policy versus M&A, there's a lot of signals saying we want more M&A, but then there's also a lot of talk, populist kind of rhetoric suggesting they will put people who are going to aggressively pursue some of these merger blocks. Unlike the tariffs, where pretty much I think everybody understands there are some type of tariffs that are going to be put into effect, the executive branch doesn't need Congress, as my understanding, to do it. So I think that's going to happen. The other major thing we all need to be paying attention to is what happens to the large spending initiatives, the IRA, the CHIPS Act, these initiatives were passed under this administration. Does the new administration attempt to dismantle those? What does that look like? How much of that money has flown down to state and local governments? So I'd be tracking anything where there's sort of IRA Act related businesses. There's definitely a question mark there that probably wasn't there pre-election. And we're kind of at Metaprop, we're just starting to understand exactly what that means. We've kind of shied away from backing companies that depend explicitly on rebates that are coming out of those programs or specific tax credits. However, I would say we have invested behind a lot of changes in the laws and legislation at the municipal level in various different cities. So if you look at portfolio companies of ours like Kelvin, which is putting radiator covers and helping with energy expenditure and comfort in buildings, or Adaptus, which is taking a building envelope and analyzing what a sustainable retrofit would be, those are businesses that depend on legislation to be moving in a certain direction at the municipal level, but don't necessarily depend on the federal government actions one way or another. Interesting thing with these large spending programs is a lot of that money goes directly into companies. Some of it goes into these rebate programs. Some of it goes to the state and local governments for their own incentive programs. So we're not experts on that to that level. But I would say those are the three major things that I see as directly impacting our investments and our portfolios. And I don't exactly know where any of those are going, but I know that they're all going to change.
So much of real estate is localized, and yet we still have this, big cases, and such as the NAR lawsuit, as well as the RealPage that, seem to be affecting multiple jurisdictions in the US. To Zach's point, so much of real estate, again, is local. My current employer, ProCentry, we're dealing with local law 157 in New York, where we help buildings comply with the new requirement to have gas leak sensors in every gas appliance in New York City. That's, not going to be affected by any change at the federal level. And, New York City and the fire department, who really pushed this law, isn't going to back down based on who's at the White House. Another thing, coincidentally, that happened today is that the Fed is, cut rates only for the second time since COVID. The first time was when the first member of Fifth Wall was on tangent during Blueprint. I suggested to Brendan, if these two things are connected, I have no evidence, nor I have any doubts that these two are connected.
One important point on that, though, is that just spending in general is impacting the recent tick up. Government spending, federal government spending, anticipation of more spending or tax cuts are causing the mortgage rates in the 10-year and the 30-year to tick up in terms of yields. So that's one other thing we have to be watchful for, right? It's like mortgages really trade over treasuries, and treasuries trade over Fed funds, but they're not directly correlated to Fed funds. There's a lot of other data that gets digested in order to have a market that prices the 10-year treasury, for example, right? So we saw this big rate cut, and then we've recently seen mortgages, though, creeping stubbornly back up. So let's hope that, we can have both Fed funds rate cut and a dramatic drop in mortgage rates. Because another thing that's inflationary, I just read this article, when people are not working at the right job, that is inflationary, right? If you have a fully functioning labor market, that is theoretically better than having a lot of people stuck in jobs where their productivity is diminished when they could be at other jobs. And a big reason why people are just not moving around at the rate they were is because they're all trapped in these 3% mortgages. And so they're not taking that job, across the country at Fifth Wall, right? When they should be. They're staying at their current employer. And I read this interesting argument that cycle is inflationary because it drags productivity out of the market and liquidity out of the market effectively, right?
Fascinating.
So anyway, something to think about. We need rates to soften because there's a lot of commercial assets that are underwater. We also need a more liquid residential market. We had the lowest amount of existing home sales since 1995.
Let's switch gears here, Dan. So Neighbor.com, you sit on the board of Neighbor, the peer-to-peer storage marketplace, and also my former employer. What do you see as Neighbor's most compelling differentiator compared to traditional storage solutions or even other tech-enabled competitors?
It's been great to be able to work with Neighbor since Fifth Wall invested back in 2021. I think the thing that drew us to Neighbor, you don't oftentimes see this, I think, within real estate tech from a business model perspective. You see a lot of marketplaces, but I think you see a lot of managed marketplaces where there still is a trusted third party that is helping to facilitate the transaction. Take like an Open Door, for example, right? And that makes sense just given the size and complicated structure of some of those. Neighbor is a true pure play supply demand peer-to-peer self-storage marketplace. They're asset light. That's, I think, the other differentiator with some of the models that we looked at. I know you mentioned Clutter. Clutter actually at one point, they bought some assets and then they also had a heavy services component to the business model as well. So a little different and really aimed at a different type of consumer, looking for that type of white glove service. But Neighbor is purely connecting, people that have supply. So that could be a parking space at your home. It could be a parking lot at a building or an extra room, a basement, to people that are looking to store something. So that could be a car, that could be, personal items that just don't fit in your primary residence. That was really compelling. You think about, some of the other marketplaces and just the size, scale, kind of economics like an Airbnb, right? That have actually been able to build a sizable business within the built world. And, I think you say, yeah, we'd love to be the Airbnb of storage. But, I think just from a business model perspective, that was really compelling.
First of all, shout out to the Silicon Slopes of Utah. But I think when it comes to the type of supply of storage units, there's the ones within residential homes, right? That brings that, community element, that trust element, besides that the marketplace involved. However, when we started the commercial side, bringing also commercial supply, being able to monetize unused or vacant spaces within malls, office buildings, that's when you can bring also homogeneity to the supply and a more standardized experience for the renter that, the storage renter is very, used to the experience where, they're sensitive to price and location. They don't want to go more than 5 miles tops in New York City, more than 3 blocks. That's too much for a storage space, but it's exciting to see that the marketplace model growing within a sector of real estate that has been, quote unquote, boring, but super stable and steady growth. American materialism isn't going away, and we love to accumulate stuff. So
I mean, just on that really quickly too, self-storage is a category, right? I don't feel like there's been a ton of, if you think about the amount of venture dollars that have been put into to real estate, Proptech over the last 3 to 5 years. There's some software applications that are now being built in terms of operating systems for self-storage assets, but largely has been kind of ignored, right? Like Clutter is probably the best known name, but as a category, we're talking about there's REITs, right? Like public storage, for instance, tens of billions of dollars of market cap and, occupancy consistently above 90%. Now there's been a little bit of softness in the last, year or so, but still incredibly high occupancy, relative to some other asset types. And there was a boom in self-storage. You're right. With materialism and people staying at home more over the COVID years, Neighbor was well timed to pick up some of that demand. But yes, I think, very bullish on self-storage as an asset class and some of the technology that's now being developed.
No, it's certainly exciting to see the response even from publicly traded commercial real estate companies that, just have, again, empty or unused space that Neighbor enabled them to diversify their revenue sources with providing valuable storage space. Dan, I want to ask you as well about Cottage, company you invested in that's helping solve the housing pain point from the consumer side. Tell us how Cottage is empowering homeowners and pros to build more and build better, and what you saw in them that convinced you to invest.
So I think initially when we invested in Cottage, it was really this thesis that we had around some of the talk about this a couple of times now on the show, the legislation changes, right? And with what was happening in California with ADU regulation on lots, there were a handful of startups that were going after this opportunity and really helping to facilitate, ADU construction on existing residential lots for homeowners looking for extra space or, potentially extra rental income, depending upon the use of that. So Cottage was a little different than some of the other businesses that were focused more on like a prefab, modular type of product for the ADU offering. They were always, focused on, hey, we can build you an ADU that's custom, match it to your primary residence. It's a little more expensive sometimes than a prefab or a modular product, but at the same time, it's also something from a design or aesthetic perspective, what a homeowner prefers. So we were really excited about that. Taking a step back, though, I think like I'm very sort of bullish on renovation planning technology. So renovation as a category, there's a handful of companies that are out there trying to solve this. I don't think anybody's really cracked it yet. And what Cottage has really built now is an end-to-end solution for construction management for renovation projects. So ADUs are an important piece of that, and obviously increasing housing is part of that as well. But you think about all the other things that people want to do with their homes. Sometimes it's an expansion of your home, a second floor. It can be something as small as a bathroom or a kitchen. There are a lot of project types that are out there. And the businesses that have really been built to date in that category have largely been lead driven. So you are connected to a GC in your area, and then really those lead generation marketplaces step back and they really aren't involved. Cottage has always been about building the software that actually supports the transaction as well, so that you can process your payments, you can see your progress. They've even thought about things like financing and design and how to continuously kind of integrate these so that you really have an end-to-end platform for a consumer that starts at inspiration. Hey, I'd love to put an ADU in my backyard. Let me start thinking about what that might look like, to, how do I finance that ADU, to how do I then construct that ADU? And there's a lot of different pieces there that in the past, I think companies have been focused on building individually, but really, I think the opportunity here is to own the entire space. And somebody owns the entire consumer journey from the time of inspiration to the time that they're actually in that new part of their home.
Fascinating. Yeah, definitely a lot of SB9 lot companies out there with ADU. But I mean, when I think about renovations, I always think about these quotes that may have been put out by Porch when they did the infamous SPAC of $500 million during COVID, that it said something like, how much we've progressed on the electronic side versus the progress that we haven't been able to do on just home renovations and construction in general, where if you have a hole in your wall, it's cheaper to cover it with a 50-inch TV than to actually renovate and fix that wall. So there's definitely a lot to do there. Now, Dan, collaboration superpower. If you could choose one person, historic or living, to do a partnership with, who would it be?
Oh, I grew up in the 90s, and my family moved to Chicago in 1995, and I'm a big sports fan. So there's one athlete who stands taller than the rest across every sport, and that's Michael Jordan. And I think if you just take a look at what Michael Jordan did, spanning both kind of over two kind of arcs of his career, and stepping away from the professional sport that he was at the peak of, and then returning to that to again return to the peak. I don't think we've seen an athlete like that. And I know there's probably a lot of people that would want to maybe debate LeBron versus Jordan, but for us that grew up in Chicago or outside of Chicago and the 90s, there's really no contest. So yeah, I think, Mike, from becoming obviously somebody who's been involved really intimately with a footwear and apparel brand through his relationship with Nike, and now what he's done with some of his endeavors on like the ownership side of things, what he was involved with the basketball team in Charlotte. I think he's also proven himself to be a pretty savvy businessman too. So respect the competition, the drive, the desire to win, and obviously the ability to be multifaceted, both within sports itself, baseball, basketball, and then outside of that.
And movies.
Yeah. Space Jam. Yeah.
Space Jam. The only movie that I went to see at the movies twice.
Yeah, great soundtrack.
Amazing soundtrack. Zach, who's your collaboration superpower today?
Thank you for asking. I've been researching a Romanian businessman named Ion Tiriac. Tiriac was a pro hockey and tennis player in Romania. And he was Ilya Nastasi's doubles partner.
Ilya, of course.
And then he retired from the game and he coached Ilya to become number one in the world. And then he went on to coach a bunch of other tennis greats like Boris Becker. And when Romania opened up its economy, because he was a familiar face and a savvy guy, he became one of the most successful businessmen in the history of Romania. He's worth $2.5 billion today. He sort of took over one of the banks that was getting privatized. He has a ton of real estate holdings. He owns a bunch of tennis tournaments. He sold the Madrid Open to IMG, I believe, for $200 million. So not only is this guy an amazing athlete, tennis coach, he's an extraordinary diversified businessman. And I think he's the highest ranking Romanian on the Forbes 400. I highly recommend watching the Boris Becker documentary that just came out on Apple TV Plus. He is extensively interviewed in it, and he is a real character. He's got wild looking facial hair. He chain smokes cigarettes, and he does not mince words with his opinion.
Nothing like a chain smoking athlete. That's at the top.
No, this guy was the second best tennis player in Romania and was probably smoking like 4 to 5 packs a day.
The John Daly of Romanian tennis.
Yeah. Or, in my day with the Yankees, Paul O'Neill used to sneak cigs, in like the extended dugout back in the day. I think 99.9% of professional athletes no longer smoke.
I think in terms of trends or something that keeps coming up over and over in recruiting or there's no formula in terms of predicting how well an employee or a co-founder will work, but something that always comes up is sports background. Did they play sports growing up? Did they play sports in college? And it just gives you that discipline, that teamwork, and other stuff that is not a guarantee, but certainly, sets you up for the business world in a way that few other extracurriculars can prepare you for.
Yeah, Slava Rubin, who's now a VC and used to be the CEO of Indiegogo, which was like an early crowdfunding platform that was successful back in the day. He said, I don't know if he's really did this for every employee, but he said he would only hire immigrants who were captains of their sports teams. And I was like, could you really find enough?
Yeah, how's the Venn diagram of that?
But he insisted that, to your point, right, you have, and if you combine athletic excellence and leadership with also being an immigrant founders are some of the most successful first-gen founders historically in the tech business, that creates like an explosive combination of human being to do something as crazy as trying to start a technology company.
Dan Wenhold, partner at Fifth Wall, thank you so much for coming to Tangent today and sharing your journey, your work, and your wisdom with us.
Yeah, thank you, Edward and Zach, for having me. Appreciate it. It's been fun.
Of course. Dan, where can Tangent listeners learn more about Fifth Wall and connect with you?
You can go to fifthwall.com, follow us. We put out a lot of social media across LinkedIn and other platforms. And also feel free to connect with me on LinkedIn, and always happy to chat with founders who have interesting ideas or building companies in the broader built world.
Awesome. If you like what you heard, please subscribe, rate, and review Tangent, and share the show with a friend. This episode is produced by me, Edward Cohen. Thanks for listening to Tangent Proptech, and remember, collaboration is our superpower. So stay curious and always be learning.